Okay, so that's a free style sign up. You can do it on the website. Okay, so this will be the agenda flow for what's going to happen. Will be divided into 3 parts. The first part is why bother to use a stock scanner at all. I think we talked about this in length in the first 2 training, but on why not, we can emphasize it, and we look at also at the basis of a stock scanner. What is a stock scanner, what actually goes into it, and what kind of stock scanner are they to use. And finally, the very short part is actually looking at the super investor stock pick criteria, how we can use the criteria of Benjamin Graham, which is the father of the founding of value investing. Now remember, the magic scanner in here, a lot of the emphasis are on fundamental investing. That's why we call it the fundamental stock selector, and we actually look at some of the super investor. In this case are the value investor, Benjamin Graham, Warren Buffett, as well as our best-selling book author, which is Dividend Don't Lie. I'm sure some of you have got the book before and actually looking at those criteria to pick up those stocks that suits you. Okay, so is this fine? Is this flow okay with you guys? Right, just give me a response there. Is the flow okay? Right, okay, good. Oh, hi Chris. Oh, hi Bill, Roland, hi CC. We got some new people in here. Okay, good. Let's move on. Now, why bother, to use a fundamental scanner too? I think this has been written many times. And see, in the basis of a goal to be educated investor, I hope all of you share the same goal as I do. Although I've been learning in this industry, is to be an educated investor. It'll be very interesting. Just a couple of weeks ago, we did a polling among the readers who come to our website, and we did really ask. And to my surprise, the question was, what kind of method do you use to analyze the market? Do you use some sort of a fundamental analysis, or do you use technical analysis? I was quite surprised. Actually, we did get almost 20 to 30% of the those who poll who don't use any method at all. Now, if you don't use any method at all, it actually itself is a method. Now, I say this is true because if you don't have any method, you tend to be swayed by the news, what's happening on Bloomberg, what's happening on CNBC, and also by the your media, your newspaper. So all this is going to play an impact on your decision making. Now, we don't want to be caught in a situation where our emotion is swayed by all this, talking heads on TV. Buy now, sell now, because the central banks are printing more. So those are very important criteria. So on the basis of fundamental investing, if you all share the same goal to be an educated investor, I think all of you do, because since you are logged into this magic scanner training webinar, I'm sure you want to be an educated investor. How many of you share that goal? Just type yes if you do. How many want to be an educated investor? Just type yes on your response. Okay, that's all, only 1-2%. Okay, just type yes. Alright, good. Alright, we're getting them in now. So again, looking at the fundamental of a company, and the reason why we want to look at the fundamental, because that will allow us to have the conviction to hold it for the longer term. Like it or not, if you look at how the stock market or the financial market is, just 2 days ago, the US Dow Jones has reached almost 5-year high, and the last high we had was in 2007. And despite what has happened, there are a lot of opportunities in there. So the things that we want to be looking at this moment is to really look at the fundamental indicators, things that we talk about PE, which is price earning, margins, dividend yields, cash flows, also using volume analysis, market cap, and which indicator it works. The thing is that when like it or not, all of us, I'm not saying just myself, we really don't have time to pour through the tons and tons of manuals of annual reports, right? So we want something that is quick, that we can quickly get on to our day-to-day routine and have something analyzed for us. So this is what a lot of people are depending on going through annual reports or reading the analyst report, and to me, that's very time consuming, right? So why bother to use? Now, a lot of time this is Petronas Chemical, which is the public listed stocks that deals in petrochemical in Malaysia. And on the December last year, 2012, the newspaper, now local newspaper, Stars, actually report that Petronas Chemical is a good dividend stock. Now, how true is this? Now, a lot of time, my opinion with the analyst report here, they tend to be very short term. How many of you actually agreed? Are they a long term in nature or short term in nature? Those recommendation that comes out on the media. Are they short term or long term? On the newsprint and media. Okay. Okay, short term, good. Okay. Short term, good. All right, that's the answer I'm looking at. So as such, we want to really look into. Now we just can't take the value, the par value that we get from this news media or print. We want to do a bit of analysis on our side. So that's the reason why we want to really look at the fundamental behind the company. What actually makes it tick? Is it profitable? What is the return on their profits? Do they have a 2-year sales growth? Those things are very important, but not just looking at the current news, what we say in here. Okay. Now, another point is that there is also analyst call, and this is from the Malaysia Insider. We'll always tell you, hey, buy at this stock at 350 and then sell at this stock at 250. So what is the basis of this? Now, a lot of people who don't have any methodology at all, as I said in our polling, they tend to get caught in all this analyst call. And I can tell you one thing, I think most of you will agree with me. If you start taking on this analyst call without really analyzing that, I'm guarantee you end up going to be losing more money than you would. Okay, so do be careful what this. We really need to do our due diligence. We need to check on things. We want to make sure what we buy is what we understand. I think that's a key word in here. Now, why bother use at all? Now, if you look at our primary focus for this market, although we have some audience here are from any audience of you outside of Malaysia and Singapore. I'd like to know anyone of you from outside of Malaysia and Singapore, because our primary focus has been the SGX and KLSE. Do I have a response there, please? Okay, hi Chris, you're from USA. All right, good. So where are you from, Chris? Which parts of states are you from? Oh, Seattle. It's always rain there. Beautiful place. It's cold, right, this time of the year, Chris? All right, come. Let's proceed on. Okay. Now, like it or not, the KLSE and SGX are always raining. Yeah, I heard about the no sunshine, like 200 days. Okay, in Seattle. But one day I'd like to visit Seattle. I was there in States just last year, in San Francisco. But let's move on. Okay, we have a chat one day. Okay, now for those of you who know and has been following this merging market, the KLSE and the SGX, you would know that over the last 2003 onwards, there has been a real growth in this area here, in the KLSE and also in the Singapore market. Now, Singapore having one of the strongest economy in this, and also Malaysia came out in the top 6 of the merging markets, which is to me very surprised, just behind China, Brazil, and Peru as the next merging market to be really investing. Of course, not to be left behind is the Straits Times Index, which is the SGX market. Now, if you take everything in terms of schemes, you get about 1,600 stocks. Now the question is, how do you look for these kind of gems? Of course, if you have the benefit of a Bloomberg terminal or some sort of research, which will involve you paying thousands of US dollar, in this case ringgit or Sing dollar, to be involved, and you really have to master it, or you have to depend on a research team that does that. So what we came up with a very ingenious way to actually scan through or to filter out to look for the hidden gem. In this case, the numbers we're talking about almost 1,600 here, right? So the trend is up. The goal is to catch some of these good fundamental stock on the top, good, moving higher. Okay. Now let's look at types of basic scanner that we have. There's three types of one we see in the market. Let's look at the first one, which is the technical scanner. Now technical scanners are very similar to what we teach in our course, in our MetaStock course. Okay, in our MetaStock course, we have give you a technical scanner. We actually look at price and volume. So typically, a technical scanner will just typically look at the price, open, high, close, and perhaps sometimes looking at the volume. And from then onwards, they do some sort of derivation to look at it. In this case, you can see this example that we have here. You're looking at the 4-week high, or crossing of a 10-20 simple moving average. So these are very basic technical indicator, right? Let me just get out from here. So now this is just one example where the scanner will pick up those stocks that has moved above the 10-day simple moving average, and there's a lead. But this doesn't really make sense to me, and I need to have more than just looking at the technicals, because sometimes I want to know why I'm holding for a longer period. Okay, so that's the reason why we want to really buy fundamental stocks together with volume spread analysis, which is, I will talk about it later in this part of the session. Now, very importantly in here, we really want to pick stocks that will give us the edge to hold on for a longer period. Now, on the next type of scanner that you typically will find, what you see here is the fundamental scanner. Now, this is from the equitytracker.com, which is another service provider. We actually look at the fundamental scanner. Now, generally, most free scanners out there works in terms of just giving you the mean and max. Like in this case, you can find dividend yield. Then you put in the high and the low, the PE ratio, and I find it's very cumbersome. I did use the equity scanner for almost a year, and I find it that, like it or not, I'm much better doing without it, and it has a lot of shortcomings. So, and this is a result. Now, what I did was I put in a dividend yield of 4% or less than 9%. So a dividend yield between 4 and 9%. Price earning, which is more than 5 and 10, and I've got whole list of stocks in here. Now the question is, there's so many in there, how do I interpret this, right? And I can't slice it from here onwards like this. I want to just narrow down to here. So we can't do that. So that's also, to me, has been a showstopper. Takes me too much time to just go through them. Okay, so here comes the multi-dimensional slice scanner. Now, the multi-dimensional scanner actually is an idea came from when I devised the magic scanner. How many of you have done CT scan? The medical diagnostic tools that actually slice through the body to really identify. Now, this is quite amazing. I just came across one of our clients who is a patient, and he was telling me how they were able to detect traces of cancer in the body, at least in the preliminary stage 1, to CT scan, where they actually slice through bit by bit to actually pinpoint where the location of the cancer. And I think in a very similar way, we are using the multi-dimensional slice scanner to really slice through, in this case, the financial stock market, the KLSE, one piece by piece by piece, by the criteria to really look for the hidden gem. Okay, so that in turn will take us, shorten our time to really focus on the other things which is matter, rather than just searching for stocks and reading a lot of news. Do you all agree to that statement? Okay, all right, good. So, good. So let's move on. So the multi-slice dimensional scanner works like this. In this case, you have a 3-dimension in here. You got profit margin, you got the market cap. Okay, I'm going to go through each of this few one by one, and then you also have the gearing. Now, if you go back to my previous slide here, this is the multi-scanner. You get market cap, you got PE. I'm going to go through one by one. We have 9 fields in there. Okay, we have our 9 fields in there, and that actually tells you things that we want it to be sorted out or we want it to be able to slice it, able to select based on those criteria. And then on the so-called the horizontal sort of vertical wheel, it's PE, price earning, dividend yield, and return of equity. So if you want to look for a particular a certain market cap, right, and you slice through here and you want to look for one that has a certain dividend yield, so by just using the criteria of sorting greater than, less than, you're able to pinpoint, like what you're able to pinpoint the locality of the cancer in a patient. You want to also pinpoint to the hidden gem of in the stock market. Now we treat the financial market, in this case the stock market, is like a body, a universal of stocks. Now the question is, how do we find the gem? Okay.